Samir Arora joining us now. He's founder and fund manager at Helios Capital. Samir, great to speak with you, and thank you so much for your time on NDTV Profit. We're speaking at an interesting time when I suppose everyone in the world is wondering what Donald Trump is going to do next. Is the Trump effect something that is going to haunt Indian equity as well?
I think Trump is overall positive for the world, overall, because some of these things have to be set right. Within US, that the wastage and everything else and whatever the overdoing of the left side. The other thing which is positive is that, which actually the Indian budget also took a little bit from that, which is you cut taxes and you save or save wastage or cut wastage or generally keep the government a bit more tight. And so these things are positive. But because he announces every day new things, which sometimes we follow through, sometimes not, that creates uncertainty and that is a negative. Rest of it, I think everything is positive. He has already achieved a little bit, and I think he's on the right path, but it's just that he's very volatile. So sometimes you may be doing the right thing, but you also have to do them in the right way.
No, I mean, overall positive is definitely there, Samir, and I think we saw that in the way all asset classes responded when it was clear that Trump would become the next president. But from an Indian perspective and the erratic statements that you're talking about, for example, this week, Monday is aluminum and steel, 25% tariffs. Tuesday or Wednesday, we could have reciprocatory tariffs. We don't know the details of those. We don't know the impact for India. Thursday, Prime Minister Modi and Donald Trump meet. So I'm just wondering.
No, but this is because we are in a bad mood as a market. It has nothing to do with Trump. All these things are there, and actually, isn't it good that the Indian system is supposed to cut some tariffs and let competition increase? We cannot have as a market or as an economy highly protected just to save 2-3 people or I think it's absolutely fair, some part of it, because we also have overdone it many times in terms of the tariffs and all. But this is just because why the rest of the world is not reacting so negatively. I think this
is... So then let me come to that point. Why are we in a bad mood as a market?
Yeah, that is the point. So our bad point, I think primarily from an FII point, I think is because of currency. And now even that has sort of happened in the sense, let's say that because it was signaled also that at the beginning of this year that the currency was kept too strong and all. But now if you look at it over 1 year period, then the Indian INR has fallen relative to dollar by some 5.1%. And the DXY has strengthened only by some 4.9%. So first of all, now we are not, we are reacting to that. And even if you compare it to other currencies, maybe let us say, if you look at the forward market, it has to go to 89.90, let us say. Okay, now it's already 88. So it has to go to 89.90. So that's another 2-3%. And I think that, just people don't like it. I think I don't, beyond a point, never cared for it. Because I used to think and still think that you can make more than that in the stock market if you wait 2% for a fall. By that time, the market will go up 2%, and therefore this wait may not be worth it. But I think that is the number one. The other is for 2-3 reasons. Our market was doing poorly, but some of those things have been, at least the initial attempts have been made. Okay, one, currency. Second, tight liquidity. Some things have been done. Third, you may say tax cuts have been given. Fourth, you may say that the government spending was not there. That is happening. If finally you look at the results, they are not that bad. In aggregate earnings growth, including BFSI, would still be some 13-15%. Now, you may say some stocks were overheated, underheated, but we were not, this idea that, oh, this is all happening because of Trump is just connecting news to the stock market every day. It is not.